Micron and Intel are getting a lot of investor attention for a lot of reasons. First, of course, the booming artificial intelligence industry is creating a surge and increase in demand for semiconductors like the type that Intel and Micron are producing. They're not the most popular semiconductors, but they are benefiting from the rise in demand. Furthermore, these two companies, being U.S. manufacturers of semiconductors, are gaining a lot of attention from investors who think these companies will benefit from the current U.S. administration's prioritizing U.S. based manufacturers of semiconductors. So, a lot of investors are asking me about these companies and specifically asking me which one I think is the better buy, Intel or Micron. I'll answer that question in this video, comparing the two across several important financial metrics, including revenue growth, operating profit margin, and returns on invested capital. I'll also share with you my proprietary DCF valuation models, which calculates a fair value for these stocks, which I updated this morning before recording this video. So I'll do all of that in this relatively short video. After this brief message from my sponsor, we'll get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So I wanted to start by comparing these two semiconductor manufacturers and designers by looking at their revenue growth. Intel has experienced a volatile period with mostly declines here. Its revenue expanded from 55 billion to 75 billion before declining to 53.1 billion in the most recent trailing 12-month period. The primary cause for Intel's revenue decline is in the server market. Previous to the expansion of these servers, these data centers optimized for artificial intelligence, Intel had a larger market share because these data centers were not optimized for AI and they were based primarily on CPUs like the kind that Intel produces, and so they had larger market share in this industry. So as these data centers are being replaced and upgraded, Intel is losing market share, losing that replacement demand. Intel has tried to develop a GPU and it hasn't come out to good fanfare. Demand for those GPUs that it called Gaudi didn't work out as what the management team was expecting, and it's not gaining very much market share. Additionally, Intel has invested tens of billions of dollars in building its foundry business, where it wants to manufacture semiconductors for third parties, manufacturing for other companies like NVIDIA, AMD, etc. But demand for that service has not come out to good demand either. So Intel's investments have not worked out well, and the revenue growth has not materialized. Micron has done a good job. Its revenue has increased from 16.2 billion to 33.8 billion in the previous decade, and the company is investing also in expanding its manufacturing capabilities and enhancing its manufacturing capabilities to be able to produce the latest generation HBM high bandwidth memory that goes into these data centers optimized for AI. It is a partner of NVIDIA in building its Blackwell technology that facilitates the growth of AI and works with NVIDIA, and NVIDIA's lifting Micron's demand as well. So Micron has done much better with its competitive position compared to Intel in the previous decade. The next thing I wanted to compare these two on is their operating profit margins, and you can see the huge decline for Intel. 2021 was the last time it generated an attractive operating margin at 27.9%. It has since collapsed to negative 5.1%. A lot of this has to do with those massive investments in the foundry segment, and it has yet to reap the benefits of those investments. Management saying that starting in 2026 is really when that segment will start to thrive. Furthermore, Micron's operating profit margin has been volatile also. It's a cyclical business, but it's still attractive at 22.4%. The next thing I wanted to compare these two companies on is their returns on invested capital. Same story with Intel here with the declines in its ROIC since 2021. Micron has been volatile, but improving of late at 10.5%, and it peaked at 47.6% in 2018. I wouldn't be surprised if the company by 2030 approaches returns on invested capital. Maybe not at 47.6%, but I wouldn't be surprised if it surpasses 35% by 2030. That's when its new investments in its manufacturing facilities in Idaho and New York should be up and online and producing at max capacity, generating the fruits of the investments that it's making today. So now that we looked at some of the important financial comparisons, let's look at valuation. And on an intrinsic value, I calculated Intel's fair value at $29 compared to its current market price of $24. The stock looks undervalued even after applying a margin of safety. Similarly, I calculated a fair value for Micron at $131. The current market price is $131. So based on my DCF, it looks fairly valued. Now, when I measured these companies on a forward price to free cash flow or price to operating cash flow, they both look undervalued. Intel is trading at a price to operating free cash flow of 9, and Micron is trading at 6.83. Micron looks relatively more attractive. So I have both of these companies rated as a buy. Intel I see as a bigger risk given that it's a turnaround story. Micron, I see it improving already, and I like its partnerships with NVIDIA. I like its participation in the data center business. It's also benefiting from other factors, including the increase in demand for components inside these smartphones, tablets, laptops, computers, etc., because they are being enhanced with more computing power as well. So if I had to pick just one of these, I would pick Micron as the better stock to buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.